Hello guys, good day. Welcome to another video lecture in ACC 311 Income Taxation. So in this video lecture, we will be discussing about improperly accumulated earnings tax of a corporation. But this IAET is only applicable for closely held corporations. So we will discuss related to improperly accumulated earnings. Okay, let's have IAET, in addition to other taxes imposed, there is imposed for each year on the improperly accumulated taxable income of each corporation an improperly accumulated earnings tax equal to 10% of the improperly accumulated taxable income. Okay, the concept of improperly accumulated earnings tax, it is when a closely held corporation do not distribute dividends or do not declare dividends and somehow improperly accumulate earnings. Okay? In that sense, guys, since that corporation is not declaring any dividend, then therefore the government is also deprived to receive 10% final tax on the amount of dividends that can be received by a taxpayer. So again, that is why um, improperly accumulating earnings is prohibited by the law. If you were found out to, if closely related corporations were found out to improperly accumulate earnings, then they will be taxed or they will be penalized of 10% na improperly accumulated earnings tax. Okay, the tax rate is 10% based on our improperly accumulated earnings. So there will be 10% penalty or additional tax that will be paid by the government or by the corporation which are improperly accumulating earnings. The rationale why 10%, because if they did not distribute any dividend to their shareholders, although it is a close held na corporation, then that means they deprive the government of collecting the 10% final tax. So again, that is why they are taxed at 10% on their improperly accumulated earnings. Because if they have distributed that improperly accumulated earnings as a dividend to the shareholders, then that means the government will be receiving 10% final tax on the dividends received by the shareholders. Now, improperly accumulated taxable income are earnings or profits accumulated beyond the reasonable needs of the business. Okay? That means, again, there is an accumulation of earnings which is beyond the reasonable needs of the business. So that is why, again, they are taxed at 10%. So we have here the immediacy test, guys. Reasonable needs means the immediate needs of the business, including reasonable anticipated needs. So again, usually in the problem naman, it is given on how much is the reasonable needs of the business. But I'd like to put an emphasis that your there is a specific revenue memorandum circular which clarifies that additional paid in capital or APIC, other term it as paid in surplus or share premium of a corporation, is excluded from the determination of the improperly accumulated earnings. So any additional paid in capital or share premium will not be included or again will be excluded from the determination of our improperly accumulated earnings. Now, we have here what is reasonable. Okay? What is reasonable, guys? Reasonable is yung na-mention ko kanina, 100% of your paid-in capital or share premium. That is reasonable. Also, included in what is reasonable is the earnings reserved for expansion, improvement, and repairs approved by the board of directors. Also included in the reasonable range are the earnings reserved for compliancy, with any loan obligation under a legitimate business agreement or debt retirement, or those um, um, agreement between our creditors. For example, we are required to maintain this specific amount in order for us to have something to be used upon retiring of our liabilities. Another is earnings required by law to be retained. And in case of subsidiaries of a foreign corporations, undistributed earnings reserved for investments in the Philippines. So if again your total accumulated earnings exceeds with what is reasonable as mentioned in this or mentioned in the code, then that means that excess of what is reasonable will be considered as improperly accumulated earnings and will be subjected to 10% IAAT. Who are covered for IAAT of 10%? All domestic corporations classified as closely held corporations. So how are we going to consider closely held corporations? Closely held corporations, one where at least 15% 50% or at least 50% of the total voting shares is owned directly or indirectly by not more than 20 individuals. So again, it is considered as closely held corporation if at least 50 or majority 50 plus percent of the total voting shares is owned by at least 20 individuals. So these 20 individuals is usually members of one family or members of one clan. So that's how are we going to qualify closely held corporations. Now, improperly accumulated earnings tax shall not be applied to the following. IAAT is not applicable to publicly held corporations, or those listed corporations, top 1,000 corporations, those again traded in the local stock exchange na mga corporations, banks and other non-bank financial intermediaries, insurance companies, taxable partnerships. So taxable partnerships are your general co-partnerships. General professional partnerships are as well not applicable. IAT is not also applicable for our GPP, non-taxable joint ventures, and those enterprises registered with PEZA and other bases, Conversion and Development Act, or Special Economic Zones. Or in short, those entities which are subject to special REITs, which are subjected to less than 30% regular corporate income tax. Now, we have here the format of computation. The format of computation is somehow complicated compared with the formats of computation that we had computed earlier. So we have a lot of components to be considered to compute for your improperly accumulated taxable income and eventually your improperly accumulated earnings tax. So again, we start with our taxable income. So taxable income, guys, this is our taxable income in deriving our regular corporate income tax. Okay? Add income exempt from tax. Okay? All income which are exempt from tax, for example, a dividend income received from a domestic corporation that is an exempt from tax. Another, income excluded from gross income, income subject to final tax. So again, those passive income and capital gains tax, and amount of net operating loss carry over deducted, or the amount of NOLCO deducted in the current year. NOLCO, guys, for your information, that is the total excess of the total operating expenses over the total operating income from the previous years or from the previous year, meaning there is higher expenses over your revenues last year. So that NOLCO, net operating loss carryover, can be considered as a deduction for a corporation in the current year. And if ever there is a NOLCO deducted, then that will be added to our taxable income. Less, dividends actually or constructively paid, income tax paid for the whole year. So again, income tax paid may be coming from MCIT or RCIT if ever the corporation is operating for more than 3 years already, whichever is higher between the two, that is the amount of tax the tax due or the tax to be deducted here. But again, the income tax paid, okay? Income tax paid. And then amount reserved for the reasonable needs of the business. So based on the items mentioned earlier, which are considered still part of the reasonable needs of the corporation. To compute, we have to compute for your total improperly accumulated taxable income. So again, add all these items to your taxable income and deduct these items to compute for your improperly accumulated taxable income. And then multiply it by our IAET tax rate of 10% to compute for our improperly accumulated earnings tax. Okay, let's have an illustration. Assume that in 2019, J. Jumfley Corporation, a domestic trading corporation registered last 2014, is subject to improperly accumulated earnings tax after having been assessed as retaining earnings beyond the reasonable needs of the business. Okay? So since guys, the business has been operating since 2014 and it's already 2019, the taxable year is already 2019, so that means 14, 15, 16, 17, 18, 19. So that means it has been operating for more than 3 years. So that means MCIT will now be applicable. We have gross sales of 7.5 million, sales adjustments, cost of goods sold. We also have deductions, guys, of 3,275,000. Interest income from BSA Bank, a foreign currency deposit system under foreign currency deposit system. So as we all know, this interest income will be subjected to final tax of 15%. Interest on notes receivable. Again, interest on notes receivable, guys, will be considered as basic income. So this will be considered as other income. Dividends from Landscaping Corporation, a resident foreign corporation. So since what is received is a dividend from a resident foreign corporation, so therefore this 100,000 will be considered as an other income. It will be considered as basic income. Another is dividends from Crafts Corporation, a domestic corporation. So this time, dividend received from a domestic corporation will be exempt based on our discussion in our previous video lectures. And CGT on sale of GEM Corporation, shares directly to a buyer. So that means this is a capital gains subject to capital gains tax for 15%. And lastly, we have amount of the dividends paid for 800,000. So let us compute for the improperly earnings tax. So again, we need to compute first taxable income because taxable income will be our basis or our beginning figure in computing for your improperly accumulated earnings. So we have here our RCIT. And also, guys, we need to compute RCIT and compare it with our MCIT because whichever is higher will be the amount of tax due paid, no? Assuming we don't have any tax credits because the corporation has been operating for more than 3 years already. So we have here from our gross sales of 7.5 million less our sales adjustments totaling 600,000. So that gives us a net sales of 6.9 million. Less cost of goods sold of 2,625,000. So that gives us gross profit from sales of 4,275,000. Add other taxable income, which is not subject to final tax. So in this illustration, guys, we have two types of other taxable income. Your interest on notes receivable of 50,000 and dividends from Landscaping Corporation, a resident foreign corporation. So as mentioned earlier, these are considered as active income. So therefore, we have a total gross income of 4,425,000 less our deductions, allowed deductions of 3,275,000. So again guys, if the problem specifically stipulate on which deduction is claimed, whether it's itemized or OSD, then you just simply follow it. In this case, the problem is silent, so therefore we follow the status quo or the basic consideration, which is to use itemized deduction. So that means we have a net taxable income, guys, of 1,150,000. Multiply it by our regular tax rate of 30%. So that gives us a regular corporate tax of 345,000. So in this case, we already have computed our taxable income of 1,150,000 and our regular corporate income tax. Okay? So, next, let's compute for our MCIT. So, MCIT again, guys, is simply your gross income times 2%. So earlier, we already have computed our total gross income of 4,425,000. You just simply multiply it by 2% to compute for our MCIT. So we have an MCIT of 85,500. So let's compare it with our RCIT. Our RCIT is 345,000. So your MCIT will be, again, your tax due will be 85,500. In the absence of any tax credits, tax paid for this year will be 345,000 from regular corporate income tax. Okay, we already have computed our taxable income and your tax paid. So second step is to compute for our improperly accumulated earnings. To compute eventually our accumulated earnings tax. So again, based on the given format earlier, we have our beginning figure of taxable income of 1,150,000. All add all components, uh, additional components. We have here income exempt from tax. So again, those dividends from Crafts Corporation, which is again a domestic corporation. So again, we have 65,000. Income subject to final tax. So we have income subject to final tax, guys, of interest from BSA Bank. Again, that is FCDS, subject to 15%. And then your capital gains on sale of GEM shares, no, directly to a buyer, that is also subject to 15%. So therefore, we have a total additional components of 890,000. So 1,150 plus 890. So we have a total of 2,240,000. Less deduction na mga components, we have dividends paid of 800,000. So the dividends paid, this is given in the problem earlier, the amount paid even constructively to the shareholders. Income tax, guys, of 345,000. So income tax that is from computed earlier from regular corporate income tax. And final tax on passive income. So where did this 60,000 coming from? So this is from 15% na 750,000 plus capital gains tax on sale of GEM shares. That is also 15%. Okay, guys, I think there is something wrong. I think your total final tax is not based on train law, but again, this interest from BSA Bank will be subject to 15%. Again, let me just correct it. So we have interest from BSA Bank that is subject to 15%. Okay, interest from BSA Bank should be 750,000 times, okay, for a while. 750,000 times 15%. So that is 112,500 plus CGT on sale of GEM shares. So that is also subject to 15%. So we have 75,000 times 0.15. So therefore, your total final tax, guys, should be 123,750. Okay? Your final tax on passive income should not be 60 but rather 123,750 from 750 times 15% and 75,000 times 15% also. So that means we have a total final tax of 123,750. So add your total deduction components of 800 plus 345,000. So we have total deductions, guys, of 1,268,750. So again, it should be 1,268,750. Hindi dapat 1,205,000. So I will just give you the updated computation on the comment section below. Okay? So that means your total improperly accumulated earnings tax, guys, will be 2,240,000 minus 1,268,750, which is our adjusted deductions. So that means your total improperly accumulated earnings is 971,750. Again, 971,250 times 10%. So our improperly accumulated earnings tax, guys, will be 97,125. Our improperly accumulated earnings tax should be 97,125. It should not be 83,500. My bad, okay? I will just give you the updated computation in the comment section. So that's it on how are we going to compute for our improperly accumulated earnings and improperly accumulated earnings tax. Okay, so we have special important notes on improperly accumulated earnings tax. Reasonable need of the business. Reasonable need of the business include the reasonably anticipated needs of the business. So we don't have any problem since we have iterated earlier naman on what are the items which are considered as reasonable needs. And also, profits subjected to IAET no longer subjects to same tax in the later years. So once the profits have been subjected to IAET, the same shall no longer be subjected to IAET in the later years even if not declared as dividends. So again guys, in the future years, if these income are not distributed as dividends, since it has been already taxed with IAET, then therefore it will no longer be taxed again. Okay? Pero these profits, no, profits subjected to IAET still subject to tax on dividends. Profits which have been subjected to IAET when finally declared as dividends shall be subject to tax on dividends. Okay? So there will now be two taxes. So 10% on an IAET, and then if it will be distributed to the shareholders again, it will still be taxed at 10%. And then, letter D, declaration of dividend to avoid IAAT. So the dividend must be declared and paid or issued not later than 1 year following the close of the taxable year in order to avoid payment of improperly accumulated earnings tax. Okay? So again, those are the important considerations that we need to remember in terms of improperly accumulated earnings tax. So again, that's the end of our short lecture on improperly accumulated earnings tax. So if you have any more questions, please comment down it below and refer to our virtual class. That's it. Thank you for watching, guys, and keep safe. Thank you.